Hello, it's Jonathan Wellham of Rocklink Investment Partners, and it's March the 29th, 2015. I wanted to take a few moments with this update to just fill you in on my recent trip to Ottawa. Last Monday, on March the 23rd, I had the privilege of speaking twice in Ottawa, and I wanted to just summarize sort of some of the conclusions that came out of those meetings and how that continues to impact the feedback I received on our investment philosophy and where we're actually allocating capital. So the first meeting that I was able to speak at was actually a luncheon on Parliament Hill with about 16 different members of Parliament. Now, most of these members of Parliament were Conservative members of Parliament, and they also had fairly significant roles in the government, and that varied by MP. And the MPs also spanned the whole country. We had some from Vancouver all the way to the East Coast, a number from Alberta, and also from Ontario. Now, the topic of conversation really was the debt storm that we're finding ourselves in as a country in an indebted world. So really talking about the global challenges, along with some of the Canadian challenges. And so we talked about debt and derivatives, the fact that the debt levels just continue to escalate globally over the last 7 years now, since 2007 up till the current situation. We've added another 57 trillion US dollars to global debt instruments around the world, so there's been no deleveraging whatsoever. And so we wanted to talk a little bit about that and the effect that's going to have on our global economy and also on how we are going to allocate capital in this market. The second issue is unfunded liabilities, the fact that governments all around the world have made these massive promises, social welfare promises, pension promises, medical promises, that in many cases, there's been no money set aside for these promises. And these promises are multiples of the current debt that we actually have outstanding. So they are just massive. Talked about the aging demographics and the serious challenge that is going to be on our countries. And this is largely because we have factored into our economic numbers this constant growth. And we've also factored in large periods of retirement. But when the worker to retiree ratio goes from 14, 15 to 1 to 2 to 1, then there's no way that you can fund many of the pension programs and social welfare programs going forward. So I wanted to talk a little bit about that. And also what we call unjust weights and measures. The fact that the price for money, which is interest rates, and the value of our money continues to be under severe manipulation. And that's because the central banks around the world continue to lower rates, and they also continue to print money, and with that printed money, buy up our government bonds, which then again puts pressure on interest rates to go down and bond prices up. So the whole thing is very, very unstable, and so I wanted to talk a little bit about this with the MPs. I also talked about what I believe are some of the key reasons why we are in this predicament, and that included everything from just the secularization of the West, the gutting of our faith commitments as a society and culture, postmodernism, which has brought the loss of truth, loss of moral authority in our culture, a lack of long-term discipline, the whole idea of paying, buy now and pay later type of mentality, this consumerism, which is just running rampant through our whole economy, which, sounds great at the outset, but we're just stealing from the future, and this is going to come back and bite us. And in fact, I think we're not probably too far away from that point. And we also talked about the breakdown of the family, and the family unit is under severe attack throughout our Western world. And the reality is we're getting a marriage divide, that families that remain intact and are committed to raising children are families that produce children that are much, much better suited for the culture, much, much more productive, and families that unfortunately are under severe pressure and breakdown and moral collapse within the family are producing children that are a horrendous cost to our society and culture, and yet we continue to undermine the family unit. So this is a major issue of public policy that I wanted to speak to the MPs about. Anyway, the long and short of it was I found the meeting very stimulating. I enjoyed it. I was able to speak for over 70 minutes. They gave me a great amount of time, questions and answers, and so on. And if I were to summarize it, I'd say that the MPs that showed up for this meeting were 100% on side with my comments. They're very concerned. In fact, one MP suggested that the scenarios that I had laid out weren't severe enough, and that the debt crisis and the challenges facing the Western countries, including Canada, a little bit more on the provincial level than federal, are very, very severe. So this underscored really how we are approaching the capital markets and how we're investing, because even the power brokers, if you will, are seeing the challenges and the fact that what is going on now is not sustainable. The second meeting that I had was with a number of ambassadors, and again, there was about 15, 16 ambassadors, mostly from third and second world countries, so poorer countries. And I talked about some of the same issues, but from a little bit different perspective on how that is going to impact third world countries if the first world nations are not as wealthy as we think and are spending their futures. And so what's that going to mean? And how is the power shifting from west to east, which we're seeing continually in our world, if you will, as you look at the world and the geopolitics. So we talked a lot about that, and they agreed. They're very concerned about the power shift and what that means for their countries, what it means if the so-called rich countries spend too much, and the impact that's going to have on their economies, where they're trying to get traction, trying to export to us. But in fact, if we are spending way beyond what we're capable of, then that's going to really hurt their ability to trade with us. And this means that they must really work amongst themselves. And so we talked about one initiative that's pretty big, and we might write about this in some updates coming forward. And this is the initiative called the Asian Infrastructure Investment Bank. And this is a bank that has been set up by China, and it now has the support of India, Russia, UK, even some of the Western countries, Germany, France, Italy, Australia, South Korea. And so this is going to be a major rival bank to the World Bank and also to the IMF, the International Monetary Fund. Now, why is this important? It's important because these traditional global entities, which were important in the global economy and still are very important, have been dominated by the United States, Europe, and Japan. And so a lot of these emerging countries and very significant economies like China feel that they're out in the cold, and how are they going to get into the game? They're going to set up their own bank. The United States did not like this, but it's going ahead anyway, and it's going to shift a lot of the new development, a lot of the new money that's going to go into infrastructure around the world is going to come from the East. And so again, this is going to have large impact on our global economy, capital flows, and where we should be investing. So it was a very productive day. Enjoyed meeting the MPs and also the ambassadors, and found the folks that I interacted with were very passionate about their countries and about trying to make things better, which actually encouraged me on the day. Also have opportunities to go back. So I'm going to be back in Ottawa in June, and also hopefully have opportunities to interact more with a number of the MPs and also ambassadors. Now, what does that mean from an investment perspective? What can we take away from some of these observations and interactions? Number one, buy quality companies with strong balance sheets, which we continue to do. The world is going to be very volatile. We've seen this already in the first quarter, and it's going to get, I think, more volatile, and we need to be in good companies with strong balance sheets. Number two, watch the leverage. Be careful about over-indebtedness, and that includes the companies we buy. We don't want companies with too much debt in their balance sheet, or in investments that could vaporize, or you could get blown up if there's a monetary crisis, which at some point we would expect that we've got to weather ourselves through. In terms of another investment observation, buy scarce, irreplaceable assets. You want assets that are backed by tangibility, hardness. They're firm assets. They're not paper assets. So things in agriculture, water, infrastructure, real estate, healthcare, staple businesses. These are all great areas which we've invested in, will continue to invest in. Fourth, get global purchasing power. The power in terms of the wealth in the world is moving around, and it's very hard to know exactly where it's going to be. So it's best to buy businesses that make money everywhere around the world. And therefore, when you buy their equities, they're selling and they're doing international commerce. And that's increasingly very important in sort of the companies that we're buying and will continue to buy, getting global companies and companies that can take advantage of all of the opportunities in the world as best as possible through really strong brands and the selling of really strong products and services. And then lastly, the continued pressure on the US dollar. Now, the US dollar has gone straight up recently, but more and more pressure is going to go against the US dollar. So we call it de-dollarization. Less trading is going to take place in the world in dollars. There's going to be more and more direct trading between countries and not going through the US dollar, which has been traditionally the case. Even on March 23rd, the same day I was in Ottawa, in Toronto, we now have a hub that is trading yuan, or renminbi, the Chinese currency. And so more and more countries are doing direct deals so that the flow of capital can move from country to country very quickly without going through US dollars. So what does that mean? Again, continue to buy assets that will do well in a de-dollarized world. And I would include in here really good businesses in the gold and silver space, because gold and silver do remain monetary substitutes. And who's buying all the gold and silver? The Eastern countries, where the power continues to move a little bit more towards. I'm not saying it's going to move completely there, but the West is weakened, and certainly the power in the East is increasing. So there's some observations for you, and I trust that's helpful. And if you have any questions at all, or you need any tax information, we're getting into tax time here in April, then let us know. Email, stop by, give us a call anytime. Thank you very much. Have a great rest of the day. Bye now.